Yo, what is going on, guys? I'm not a financial advisor. This is not financial advice. If you want to watch my live streams every single day, I do basically what I'm teaching now, but just in live time, and I'll show you how to do it all in live time. So click the WAP link in the description. I will probably be raising the prices in December, so make sure to get on that. Lastly, if you want to start an Apex account, Apex is running a 90% off sale right now. I think there's 11 days left or 12 days left. Use the code in the description, the RBE, whatever it is. Click the Apex link. Really good for practicing futures and practicing what I'm teaching specifically. Yeah. All right. So for this video, I'm going to be showing you guys how to actually manage risk properly for an inversion setup. And I'm going to actually use a loss example of a loss I took earlier this morning and kind of show you guys what to do. So the proper way to do this is do this. Okay, so let's say we're on an account, okay, and let's say I only want to risk $200 on this account. Okay, let's say this is a live account, and I'm on MNQ. Okay, now let's say I only want to risk 200. Okay, well, what does that mean? That means I can take up to however many contracts however many contracts that will not go below $200 if I stop out. So for example, if we have a price level here and this is 14,000, and let's say we want to long here, okay? Let's say you want to long in this level, and the stop loss would be, let's say 13,000, let's say 980. Okay, let's say there's like an order block here, or let's say there's like a swing low here, or whatever it may be, okay? Now, let's say that swing low's there, and that's where you want to put your stop, okay? To me, that would be a 20-point stop loss. So I'd be willing to risk however many points I could get to not allow me to go to 200. So if we took 1 micro here, okay, you can see it's a 20-point stop times 20 points times $2 per micro. So it's $40 per micro you're going to lose here. So if I took 1 micro, 14K, and lost, and it hit the stop loss here, I'd be minus $40. And then I just do however many times I could lose $40 until it equals 200, which is obviously 5, because 200 divided by 40 is 5. So we could take up to 5 contracts here. And if I lost if I took 5 contracts here and was losing a trade, I lose 200. Okay, now taking that logic, what I do for an inversion like this, okay, is this, right? If I see this inversion, this 2-minute inversion, what I do is I typically market buy. So I'm going to go over it both ways. I typically just short here. I short the close. So I'm shorting here, all right? And you can use this short position. I'll show you how to do this in a second. And I like to guess where, okay, if I were to get stopped, the close could be about here, which would be best case scenario, here, worst case scenario, or here, worst case scenario. So I meant to say middle case scenario. So worst case scenario, close is probably going to be around here. Best case, close around here. Middle case around here. So I'm going to account for that middle case right here, and I'll risk however many contracts I want for like this middle area part. Okay, so if I entered here and I wanted, let's say, this low down here, okay, this low right here, I'd basically just guesstimating where I think the close is going to be. And you don't know exactly where the close is going to be, but because I'm guesstimating, I kind of go in the middle where I think it's going to be. And if I entered here, okay, you can see that's 14,309. This is 14,342. Okay, so that's about a 32-point stop loss. So if I only wanted to risk 200, a 32-point stop loss times $2 per contract, it's $64 per contract. Okay, means we could take about probably 3, because 60, 120, 180, and then 192 if you add 12 to that. So we could probably take about 3 contracts here. All right, and before this candle actually forms, okay, do you know where we're going to close below? No, you don't. So you're going to do the same thing. You're going to say best case scenario, we close here. Middle case, we close here. Worst case, we close here. Okay, you don't know where we're going to close. What I'll do sometimes is I'll literally put like a sell limit. Okay, I'll literally just put a sell limit here, and I'll do like 3 contracts. Okay, and then I'll do like another sell limit, like right here, with 5. Okay, now these are not sell limits I'm waiting for price to retrace to. These are sell limits where if we go here, if we close here and it's a close like this, that's gonna make the risk reward something like this. Okay. So immediately, if that's better, so I'll drag this red line and quickly it'll just fill me. I'll just drag it down here. It'll just fill me. It'll market buy me in, or market cover me, or sell me in. Okay, so I'm filled there. Now, if we get a close like here, okay, I'll have this 3 ready, and you can see I have both ready, and I'll just be like, okay, the close is kind of low. I'm only gonna go 3 contracts in here because the risk reward's worse. So I'm gonna have to size down to where, okay, if the stop loss is 32 points, I'm only gonna be able to take 3 contracts versus if the stop loss is right here, which would only be about 20 points, maybe I could take 5. So you kind of guess on where the close is going to be, and then wherever it is, you kind of have 2 limits ready. And if we get a close down here, now that's horrible. That's a 42-point stop loss, meaning you'd only probably be able to take 2 contracts here. So I just delete 1, and then I just drag it down and only get in 2 there instead of 3. So do you see how like you don't know where we're going to close, but you kind of have a couple of case scenarios, and you have the contract amount ready for whichever one you think. And something you can do is if you right click this, you can actually do risk, and you can do percent of your account or whatever, or you could do dollar amount. So what I'll do is I'll do risk 200 only. I'll click OK, and if we get here, you can see if we go to add, look at, if I click the plus button, which you cannot see right now. Let me see if you can take it off replay mode. So if I want to short here, what you can do is this. Right click, do however much you want to risk, go to settings, and then go, I want to risk 200 only. So now we can right click this, click create limit order, and it already has 6 contracts here, which is risking 177. Now, if I move this down and then the right click and create limit, it changes it to 3. See how that works? So you can already have it automated to wherever the close is, and then as soon as you get that close, move it to wherever the close is, and then do the create limit order. And that's how you do it. But what I showed you guys a couple minutes ago right here, you have to kind of guess, okay, what's going to be the worst and what's going to be the best case scenario for a close like that, okay? So that's kind of how I do it. I'll show you one more example, but do one more example. So I'll do an example of, let's see. All right, let's do an example of this right here. Okay, so we have a 1 minute inverse, potential inverse right here, okay? And let's say I want to long if we're going to break this, okay, close above it. I don't know where we're going to close above, but I'm going to put a long position there, and I'll kind of, wherever we close, I'll put it. Okay, but for the stop loss, if we do close above it, you want to think, okay, what's going to be the worst case close? Worst case close, probably going to be down here. Best case around here. You're kind of just guesstimating. And then best case there. So here's the middle case. So I would account for the stop loss to be here. So depending on the close, okay, you don't need to know the close now, because depending on the close, you're already going to have this set up where you can right click settings, and you're going to have it automatically risk 200 no matter where the close is. So now you type in that 200, you click OK. Wherever the close is, you move it to here, and then you just click create limit order or whatever, which you cannot do right now because we're in replay mode, and it will probably do 2 contracts here, or if you move down here, it'll probably put you in like 4 contracts. So that's how I calculate the risk on inversions. If you want to be safe, put it under order blocks, put it under swing lows. That's a much bigger stop loss, though. You can see like this is going to be a much bigger stop loss. It's up to you how to manage risk on this. I prefer the close above and below for the loss. But like I said, definitely up to you guys. Doesn't really matter that much. And yeah, let me know if you have any questions about this. This can be a little complicated, risk managing inversions, because a lot of people say, like, how do you know where the stop loss is going to be if you don't know where we're going to close, right? That's why I draw these 3 lines. You go in the middle. I just kind of guess. And And if you don't like guessing, then just do 75% size instead of full size, right? Because at least if you do 75% and we have a worst case scenario close, it's going to be the same as if you had a hard stop. All right. So that's kind of how you calculate risk with this inversion setup. Let me know if you guys have any questions about that. And other than that, peace.